Hello, everyone. Thanks for coming. My name is Scott Webb. I'm editor of Aqua Magazine. We're here today to talk about uh, how the right financing can help your business. I have Sarah Bess with me. She's an expert on this subject. And we're going to learn a lot in the next hour about finance. The thing I've been doing this job for a while, and the reason I've stuck with it is I like learning. I like learning from people, and I'm looking forward today to learn some things about how pools and spas are finances in ways that maybe people can make more money and do it more effectively for their businesses. I work for Aqua Magazine, which is the top resource for retailers, service people, and builders. And one thing I did want to mention is that there is a panel on the right side of your screen for questions, and you can type those in, and we will either look for a place to answer those either during or after the presentation. We often have more than we can handle, but we'll try to get to those. And you can receive an email of the presentation after we're done today. Sarah, you've got some great stuff to talk to us about. Are we ready to get started?
Yes, we are ready.
All right.
Sounds good. Thank you so much, Scott, for that introduction. I included you in my webinar, but I won't repeat it, so I'll skip on. Just do a brief introduction of myself and then of Lyon, who we are and what we do for those who maybe are familiar with us but are not aware truly of what we do for those who are brand new. I'm Sarah Bess. I've been with Lyon Financial for about 7 years. I'm the director of marketing, so I handle most of our company's advertising, publication advertising. What we do with Aqua Magazine, trade shows, events, and all of that falls under my responsibility. In the last 7 years I've been with Lyon, we've grown a ton thanks to our partners in the industry. Last year in 2021, we financed about $1.2 billion in pool loans alone. We work with a network of about 9,000 contractors and growing. So we're constantly working with new pool businesses, spa businesses, remodelers, and really home improvement companies in general who are looking to offer financing for their customers. So I'm really proud to be a part of it. I love this industry. It's a lot of fun. There's never a dull moment, it seems. And I appreciate the opportunity with Aqua and look forward to get started.
Well, we've probably got a lot to cover. Let's just dive right in.
Yeah, most definitely. So I'll start off and just say a little bit more about Lyon, who we are, how we started. We have been in business since 1979. We were founded in Southern California by our owner and president, Richard Lyon. We started over 43 years ago, looking forward to our 43rd anniversary this year. We are based out of Mooresville, North Carolina. We're about 30 miles north of Charlotte. We have 2 offices and about 81 employees. So we are technically considered a small company, but we do a lot of business. We did just under $1.2 billion in loans, like I said earlier, last year alone. That's about 23,000 projects that we financed last year. So it took a lot of teamwork and effort to get that done, but it was a great year for the industry last year. We work with about 9,000 pool companies and home improvement companies nationwide who offer our financing. We have always sold ourselves just as a resource. Use us when you need us. If you have a customer who may not have the cash or is asking about financing options, we want to be your #1 resource and help your client get the financing they need to get their project done. And we'll talk quite about that a little bit more today. With Lyon, we work exclusively with several lenders to offer the best rate and term for homeowners who are looking for financing. And with most of our programs, we pay pool companies directly. And we do that for several reasons, and we'll jump into that later on in the presentation. To start off and talk a little bit about financing, I wanted to share some stats of Lyon and what we've seen over the last 4 years specifically. I think a lot of pool companies and business owners, they know what financing is. They know it's important. Many people just kind of stay hands off. They don't really want to be involved with it. They don't want the liability of discussing rates and terms, or they feel like consumers who are looking for financing are maybe not qualified to be a customer. And there's a lot of myth about that. I'd like to debunk that today and kind of talk about the true demand for financing and then what we foresee and what we forecast in the coming months and years. So just to share some stats on what we've seen over the last few years, there's a lot of customers who are looking for financing. This is the number of applications we've taken each year over the last 4 years at Lyon. This is about 140,000 applications in 4 years alone. You can obviously see 2020, the huge demand that year.
Wow.
Obviously, due to COVID, everyone was in their home, a lot of unknowns going on. The one for sure factor was that everyone wanted a pool that year, which was, well, you can tell, our application volume doubled that year alone. Last year for 2021, we took a few less applications, about 38,000. Much of that was because of that raw demand had slowed down. But most of those clients who applied in 2021 were looking for financing and completed a project either that year or earlier this year. So the demand was there and it continues to be there. Next slide shows the average loan amount requested over the last several years. Again, a big factor as to why consumers are financing. In 2018, our average loan that customers requested on their application was just over $43,000. This year, it's looking in the low 60 range. Many factors and variables are a part of that request. But when you look at the data and the numbers, the average pool loan has gone up about 50% in the last 4 years. And there's several reasons for that. We find that many consumers, obviously, number one, the cost of materials is up considerably. So a customer who was looking for a pool 2-3 years ago, maybe they were quoted an average in-ground pool for $40,000, $45,000. Not the same price anymore. We're looking more in the $60,000, $70,000 range. Consumers who maybe were saving cash for that project and just had enough money but didn't pull the trigger then, they're regretting it now because the cost of that project is so much more. So with increased rise in cost, labor, inflation, all of these factors, the average loan amount for pool financing has gone up about 50% in the last several years.
Sarah, do people normally finance the entire cost of the whole project, or do they sometimes, finance, maybe something short of that?
Many of the clients that we deal with, they will pay like some sort of deposit out of pocket to their pool company directly. Many pool companies require like at least a 5-10% deposit for permits and other upfront costs, really to make sure that the customer's serious. So many of them will pay that deposit out of pocket and then finance the difference with us. So for the most part, they're financing the majority of their project, if not all of it, just depending on their relationship with the pool contractor.
Okay.
And again, that kind of goes into play when we look back at 2020 number and what has happened since then. This is related to an article we did with Aqua Magazine last year, an editorial piece, kind of talking about the backyard renaissance and looking that more customers and more consumers want the full backyard package and not just the pool. I wouldn't tell you, I would probably say half of all the applications we receive now are not just a pool and basic square feet of decking around it. These consumers want the fence, they want the landscaping, they want a pergola, outdoor kitchen. They want all the features that make their backyard usable right off the bat. So because of that, those increased costs and everything that goes into those projects, more and more consumers are looking to finance because they want everything that they want done all at once. We see that with so many consumers now. They consider the backyard more of an investment instead of an emotional purchase. When I first started here about 7 years ago, I did lending, and we would look at applications where it was possibly a husband and a wife. The husband was not completely sold on building the pool, but the wife wanted it, so they built it so that way the wife was happy. And now it's not like that. It's, hey, we've been planning to build a pool for 3 years. Our contractors finally has room on his schedule to fit us in. We want to finance, we want the pool, we want an outdoor kitchen, we want everything done all at once. And because of cost, inflation, and all these things, it's becoming a lot more expensive than the consumers may have thought a couple of years ago. And now they turn to financing to be able to make that dream a viable reality. So then we talk, well, why do homeowners want to finance? I hear this all the time. We were at several events this past few months, and a lot of pool companies said, well, my customers just pay cash. I don't deal with financing. And the reality is many of those customers who do pay cash did finance in some way, shape, or form before they ever spoke to you. Almost 60% of homeowners will pay for their home improvement with methods other than cash. So 60% of homeowners are going to be paying for their project either with a cash out refi, they refinance their house, they will pay for it with credit cards, a loan against their 401k, they will get a personal loan through a personal loan provider or a pool loan with a financier like us. They will figure out some way to get the cash other than using cash or savings. About 2/5 of consumers will use some funds in their bank account. But what we're starting to see more and more with changes in the market is that customers want to keep their cash. They don't want to touch it. And they're going to use a financing partner or institution that their contractor recommends. About 1 in 4 will go with a financier that their pool company recommends. Other factors in looking at wanting to finance is, like I stated, the keep your cash mentality. But right now, the market's a little unstable when you look at the Feds raising rates and other factors coming into play. But right now, for many consumers, they make more money with their cash or savings sitting in an investment account, yielding 9–10% annually. They keep that money in that account and finance with us. Interest rates are as low as 4.99%. They finance with us, get the loan, get the project done. They finish their project and can pay it off early with no prepayment penalties. And during this time of construction, their money is building in their annuities or other investment funds and actually earning them money. So more consumers want to finance because it's a healthy financial decision, not necessarily because they don't have the funds, but because it's the best financial decision for them. The other factor too is a simpler loan process. Many consumers, when they start looking at borrowing money that's not in their bank account, it becomes a hassle. If consumers want to refinance their home or get a cash out equity line of credit, it's really difficult right now. Everybody's refinancing, so the wait times and turnaround times at traditional banks and lending institutions are 4 or 5 months out for refinances. You also have some customers I've heard who have borrowed from their 401k or other retirement accounts. When you start getting into borrowing from those accounts, you can incur penalties and other factors, and it becomes more of a headache than more consumers want to deal with.
Are those consumers just unaware often of the options in financing that they might be able to get through a company like Lyon? I mean, the things that you were describing, borrowing against your 401k and God forbid credit cards. Do people just do that because they don't know that option is out there?
Yeah, I think so. I mean, and I read, we have a strategic partnership with the Pool and Hot Tub Alliance, and I was reading their market report for 2020, and I think the stats were that there were in 2020, about 95,000 or just under 100,000 new pool builds in that year alone. And in 2020, we financed about 17,000 projects. So when you look at that of what we financed versus what, according to the PHTA market report, we built, I mean, we financed, just under 20% of what was built in the US. I mean, I think all those other customers that, they either didn't know we existed or, or the contractor didn't offer any types of financing options. And it kind of just left them to kind of figure it out on their own and figure out how they needed to pay for the project.
Same.
And yeah, and that goes next to the next option is the traditional types of financing. And this is just financing in general. This isn't necessarily just about pools. This is just like, I want to make a big purchase. How am I going to pay for it other than my bank account? And I run across these often when dealing with consumers. The first option for a lot of consumers is credit cards. And credit cards, there's nothing wrong with that. I mean, it's a great option if it's just a smaller purchase that you're going to swipe your card, you're going to pay it off before the end of the month. When you start getting into these larger projects, like your average in-ground swimming pool, it can be pricey, not necessarily for the consumer accruing interest, but for the pool company. Everyone charges merchant fees, swipe fees for running a credit card. So, depending on your provider, I mean, you could be getting charged for, swiping a card. Many pool companies do factor in some sort of credit card processing fee, which offsets that fee, but again, it's just an extra step in your process that you don't have to deal with. Consumers also, like I talked about a lot, it's refi central with the housing market and home values sky high right now. A lot of consumers are refinancing their home, doing just a cash out refinance or doing a HELOC. That is a good option if that's what's best for the customer financially. We always tell consumers we want ultimately what's best for you. So if you feel that you're going to get the best rate and term for you for refinancing your mortgage, then go ahead. Traditionally, mortgage rates are lower than an unsecured loan because it's a secured loan. There's collateral involved. You don't make your payment, the bank takes your house. So those interest rates are low, but even right now with the market changing, mortgage rates are increasing considerably. Plus, it's a very lengthy application process. Right now, refinances are taking several months. It takes a lot of paperwork. There's all these fees involved with your appraisal fee, closing costs, and other things that may just put a damper on the process. If you've been waiting for a pool for a long time and the refi is just dragging along, it can kind of dampen the mood, so to speak, for consumers. Another option, like we talked about, borrowing from assets in retirement. If you have a lot of money in your retirement, want to borrow from it, great. If that's ultimately what's best for you as the consumer, we recommend that you do that. But there are some negatives from it. There's penalties for taking money out early. You're taking from retirement. You don't know what's going to happen in 20 years. It's just not a safe option. The last thing is a personal loan. Many consumers, they don't want to pay with credit card. They don't want to refinance their home. They don't want to borrow from retirement accounts, so they start looking for just a personal loan. What can they find that will give them the best rate and term and give them an answer right now? Most traditional brick and mortar banks and lending institutions do offer personal loans. They offer home improvement, debt consolidation, wedding loans, all kinds of loans for different factors. Traditionally speaking, though, most personal loans have a really short term and a higher interest rate than what programs that Lyon Financial offers. And we'll get into that here shortly. So then we look at basic financing terms. We deal across this as business owners and business professionals all the time. We understand what some of these things are. We've heard them a lot, but I want to kind of define them a little bit more and how they relate to specifically the pool industry and financing pools. So number one is term. Term is the length of a time to pay back a loan. Traditional personal loans, like at your average brick or mortar bank, you walk in and you say, hey, I want $50,000. They're going to say, okay, we can do a secured loan against your mortgage, or we can do an unsecured loan with a term of about 5 or 6 years to pay the loan back. And with a 5 or 6 year term, that's usually the max. And usually that is a really high monthly payment depending on how much money you want to borrow. Interest rate, that's the amount charged in addition to the principal balance to use the lender's funds. So we all know what an interest rate is. You pay interest on pretty much everything. There's some lenders out there who offer like same as cash, zero interest kind of loans. It's just essentially it's no interest for the life of the loan. Many of those institutions, though, do end up charging the dealer a fee to be able to use those types of programs. So it's not always a viable option. Next term is APR. That's your interest rate plus any fees that may be incurred. So if you're taking out a loan, say for a pool, you have your interest rate, and then if your APR is different than the interest rate quoted on your loan documents, that means there's some sort of fee or closing costs that is incurred into your loan. The APR is going to impact your total loan amount, your interest paid, as well as just the total loan amount and principal balance. And then there's secured and unsecured loans, which we've already touched base on. A lot of people understand what that means, but it's always good to have a refresher. A secured loan is going to be like a mortgage, a car loan, or some other sort of installment loan that has collateral attached to it. A secured loan is pretty much attached to something that can be repossessed if something were to happen. Oftentimes we will see consumers who will refinance their home to pay for their pool. Secured loans do have a little bit lower rates traditionally than unsecured loan, but again, you risk that the risk of using collateral in case you default on the loan. And then the last one, unsecured loan, that's a loan granted solely on creditworthiness, no collateral is needed. So that's a loan given solely based on your credit score, your overall credit history, making sure you make your payments on time, you haven't defaulted on a loan or discharged a loan, and then also your debt to income ratio, meaning how much money you make versus your debts going out. Traditionally, most unsecured loans are written at a shorter term, 5 or 6 years. They like to see debt to income ratio of less than 35% or less. And we at Lyon offer a little bit better options that are more catered to pool buyers. So to reiterate a little bit on interest rate and APR, I wanted to dedicate a slide solely to this to talk about solely fees, and they are prevalent in the pool industry, specifically in pool financing. We at Lyon, we don't charge a customer any consulting fees. The interest rate that we quote them is the rate and the APR that they're going to get. But it does impact your customer throughout the life of their loan. If they were to have a 4.99 interest rate and a 4.99 APR with a fee worked in, it's going to raise their APR. They're going to end up paying an additional $11,000 over the life of the loan if we're looking at a basic loan of about $75,000. It impacts the monthly payment, it impacts their total principal balance, and it impacts the interest that they're going to pay over the life of the loan. So I say that, I mentioned that in this just to educate pool companies and pool builders on, who you use for financing. Just make sure that when your customer, is reading through documents, just make sure everything's very clear and concise for them. So that way they understand exactly what they're getting into with their loan, making sure there's no hidden fees or any hidden costs involved in their financing. Full transparency is the way to go because it's ultimately going to set you up for a better experience with that client during the construction process. And then how does that, all those terms, we talked about interest rate, APR, term, how does that impact a pool company and a customer who's looking to buy a pool? And really it comes down to affordability and realizing truly how affordable a pool can be. The lowest APR and the longest term is going to give that customer the lowest monthly payment. And we can relate back to what I talked about a few slides ago with your average personal loan and your average brick and mortar bank. Customer walks into a bank, then they want $60,000. The bank is going to tell them you need to refinance your home, or I can write you a personal loan. It's only going to be a 5 or 6 year term, and the interest rate is going to be 8 to 10%, and the max loan I can give you is $40,000. That's typical for most average banks and credit unions, especially right now in this market. They could give the customer a secured loan, but again, they would have to have the equity in the home to be able to afford this. They would also incur closing costs and consulting fee and some sort of administrative fee. With Lyon and with the terms and rates that we offer, it really makes the pool and that backyard living experience truly affordable. We offer interest rates as low as 4.99%. A third of our customers get that interest rate because they have good credit. And for $4.99 at $60,000 across our 20-year term, that's less than $400 a month. All of our loans are catered to pools, so we offer low rates and long terms. We offer 15, 20, and 25-year terms. All unsecured loans, so there's no mortgage involved. It's strictly a personal unsecured loan based on the customer's credit. So when you're looking at a monthly payment, when a consumer is looking, especially right now, at the total cost of a contract and a pool bid, you spent time with the consumer, your designers had a great design built for them, and then they look at the price. And then they say, well, this is a little higher than what I expected. Or maybe they had already given you a budget, but then they realized that it really, truly wouldn't give them what they wanted. Most often I see basic pool combos or basic pools, and the consumer wants to add a spa, or they want to add a sunken table or some sort of other feature that does end up being costly. What most of our top pool company partners will do is they'll sell the customer on a monthly payment. Right now they'll use our loan payment calculator, say right now, here's the price that we quoted you. On approved credit, here's what you could get for financing. Your monthly payment could be as low as $400 a month. But if we add in that spa that we talked about, it's going to raise your total contract price by about $15,000. But if we increase the loan amount with still the same interest rate and term, your monthly payment only goes up about $100 a month. When you present it to the customer that way, they can see how affordable that buying the pool can be, as well as the other features that they wanted. And then at that point, usually their wheels will start spinning and they'll say, okay, well, what about if we added that water feature or added that waterfall, or instead of the basic waterfall, how about we do a rock grotto? They're going to start, their wheels will start spinning and they'll start talking about these additional features that they maybe didn't think was on the table due to price. But once they realize affordability, then they're going to want to talk more about those and get excited about the project because they know that now they have a viable payment option. And as it translates to you as a pool company, that's ultimately increased contract price and that's increased profits for you. You're going to take a customer who maybe initially was only working with a $50,000, $60,000, $70,000 budget. You talk to them about financing and get them excited about payment options, then that becomes a $80,000, $90,000, $100,000 project or even more, because then they realize they can afford all the features that they wanted. And that relates to earlier in the presentation, that turnkey backyard that more consumers are wanting. This makes that happen. They can get the pool, they can get the outdoor kitchen, the pergola, all the features that they were looking for that they initially didn't think that they could get. And ultimately that just puts more money in your pockets and increases your overall ticket size for the jobs that you sell.
Yeah, when you change that language to a payment per month, it just changes the way the whole thing feels. I was pretending I was a consumer looking at 60,000 or 70,000, but then you talk about 450 a month, and that's just a different way of looking at it.
Yeah, and I'll share this story. So I'm in the greater Mooresville area, Lake Norman, and 2020, we all know, was a crazy year. A lot of us worked from home here at Lyon. I was one of them. And it was a new neighborhood that I just moved into in February, so right before COVID hit. And all of my neighbors had pools. And it was literally my son and his best friend were out in the backyard on a plastic water slide. And I looked at my husband, I said, we're going to need to get a pool so we can fit in and keep up with the Joneses. And a great local company, True North Pools, came out, gave me a quote. And in my head, we wanted to stay at a certain budget, and we quickly realized that was not going to be it. So, financing really opens up the doors for so many people because then they can really get what they want and just make that payment. Most consumers, they are payment minded, but they're also very financially savvy. So they also want the best interest rate. They understand that the best rate and the longest term is going to give them that low monthly payment. So they want to shop and get both options. And at Lyon, the programs that we offer makes that happen and makes that project a real reality for that customer. So my husband and I, we got the pool and we were able to keep up with our Joneses and keep the kids happy during the rest of COVID while they were at home. But that was the attitude of so many consumers that year. And even in the now, it's not necessarily about COVID anymore. It's just more of that environment and that mindset of, I want to enjoy my home more. I want to enjoy outdoor living more. And then this is, how do I achieve that? And I think financing is a big reason and a big player in that scenario.
Yeah, and getting what you want is ultimately the key to success for the whole endeavor. I mean, if you end up with something short of kind of what you really felt you needed, then ultimately the whole project never gets where it should go.
Yeah, and we hear that a lot. It's, even when I dealt with it during construction, it's like, we said, well, what if we wait to put in this waterfall? Or what if we wait to do this patio? What if we just do this section instead of that section? And they're like, then our equipment, our stuff, our trucks, everyone's going to come back out here and do this work again. We're going to tear up your yard again. Let's go ahead and do what you want so that way we can be one and done and get out of your hair is pretty much what most people say. And so more and more consumers are like, well, they feel the same way. They want to get done what they want at that time Everyone, the modern buyer is just, I want it and I want it right now. And what's the best way to make that happen? Right now in the pool industry, it's financing and be able to offer that to ultimately help your business and grow it.
That's what we're after.
Yeah. So again, going to the next slide, we've talked about the demand for financing. We know it's there. We've taken 140,000 applications in the last 4 years for it. The average loan is up 50% versus 4 years ago. Consumers are wanting to stay at home. They want to have that whole backyard package. And we know that financing is important. We know consumers are looking for financing. So as a pool company or as a pool business, why is it important for you to offer financing, and how can it actually help you? And there are several factors that go into that. These are the more generic ones. And every pool company, your market's going to be different. So what may work in the greater Charlotte area may not work in Houston. And what works in Houston, Texas may not work in Kentucky. I mean, every market's different. So you're gonna have to figure out what works best for you. But with financing and offering it, it helps you control the sale and kind of take charge of the customer. If you're talking to a customer, to a homeowner, and that you've given them a design and a quote, and they say, well, this is great, do you offer financing? I don't know how I want to pay for this. What do you recommend? It puts you in control of that. Some pool companies, I've heard them say it because they didn't see the value of it, and they'll say, call your local bank, and when you figure it out, call me back. I think that was the attitude for a lot of companies for a long time, but seeing now the prevalence of financing and how it can help you, that's the wrong way to go about it. If you offer a financing partner, you say, here's who I use, here's several companies, contact them. Or, hey, here's a flyer for Lyon Financial, contact them. We've had good success with them. You are taking control of the sale, and you are telling the customer and giving them options on where they can go. And that will give you credibility too with them, because they see that you do offer options and are willing to work with them. And they're more than likely to take that seriously versus just going and shopping around. If they were just to go to their local bank and start shopping, they're going to get the scenario like I talked about before. It's going to be an unsecured loan with a really short term and a higher interest rate. It kind of pops that bubble. They're not going to be very excited about it, and chances are they may not, they may just ghost you and not come back. They would come to someone like Lyon, a traditional or a pool financing company. They're going to get this pre-approval in about 1 to 2 days. You're going to know their buying power real quick. They're going to know what they can be approved for and what they can afford, and continue on with the process. If you suggest financing and then the customer moves forward with it, more than likely that client's going to commit to you and go ahead and commit faster versus someone who has to go hit the pavement shop for how they're going to pay for it. Many of the pool companies we work with sign contracts with consumers contingent upon financing. So they'll say, sign this contract, this locks in your price, this locks in your time frame. We're just going to do this contingent upon financing. When you're pre-approved, give us your pre-approval letter and we'll go ahead and put you on the schedule. Consumers are more likely to sign on the dotted line, so to speak, and commit to that project versus someone who's essentially going to be sent out the door to go look for financing themselves. And the other thing, like we talked about, is upselling and using the payment calculator. Once customers understand how affordable that a pool can be, they're more likely to either add on additional features or go ahead and sign and get commitment versus consumers who have to go shop around. We have a calculator that we use that I'll talk about a little bit more later in the presentation, that I tell everyone to bookmark, save it on their desktop or on their phone, so that way you can use that with a customer and go ahead and go over payments with them and show them how affordable it really is. And with incorporating financing into your sales routine, again, everyone does it different. You're going to understand your market better than anyone else. But here's what most of our top partners do. Kind of that subliminal message, kind of passive approach. Many promote Lyon on their website or social media, just financing options available. You don't have to say, hey, use these guys, or I only use these guys because they're great. You don't have to do that. Just if you say that you offer different financing options or financing is available, more than likely consumers who are shopping you, they'll ask you about financing and go ahead and start that line of communication from there. We offer several tools for our top partners to offer financing. We have custom landing pages and graphics that we can share with you. You can put on your website, your Facebook, Instagram, whatever you guys use to keep in touch with your clientele, we have something for you that you can share. If you have a showroom, we have signs and banners you can put on your desktop, on your tables, on your front door. We offer multiple different options. For those who have presentation folders and still, have folders that they present to the client with their work and with vendors that they work with, we have literature that we can provide for you free of charge that you can offer to your clients to show them the benefits of financing. The other recommendation we have to incorporate financing to your routine is just to offer it to everybody. You're going to have to figure out one way or the other how that customer is going to pay for that project. You've done the work, you've done the design, you're discussing, the initial process with them. What I recommend to most people is just explain what your payment options are and include financing in one of them. Say, okay, here's the contract price, this is my payment terms and how I collect payment for my contract. We do offer multiple payment methods. I take MasterCard, Visa, check, cashier's check. I also offer financing through one of my partners. You can go to my website and check them out if you want to get pre-approved for financing. At that point, the consumer will tell you, okay, no, I plan on writing a check, or, oh yeah, I was planning on using credit cards. Or they'll say, oh, you offer financing? Tell me a little bit more about that. And then you can resort to flyers, literature, or your website to share more information with them. And then if you have a client who shows that they're interested, you can even take it one step further and go ahead and email them the link to apply online. It's a very brief application we have on our website. You send the customer the link. If you're one of our top partners, you may have a co-branded link already with your company name and information in it. Send them that link so the customer can apply. It takes about 5 minutes. They'll get an email within a couple minutes of applying, letting them know that we've received it and we're working it. And they'll typically have a pre-approval in 1 to 2 business days.
Do people ever use that pre-approval to help screen clients? I know that in the last couple of years, there've been a number of customers that have not really understood the finances involved, and only through the pre-approval process we discovered that they, maybe were not ready to buy a pool. Does that ever work that way for a builder?
It's going to depend on your clientele where you're at. I mean, I'll tell you from experience of all the applications that we've received so far for the year, 94% of them are approved. We've taken a little over 11,000 applications for the year. 94% of those have gotten an approval at Lyon. We offer a pretty wide range of credit scores that we can cater to. So chances are, if we can't help your customer, no one can. But we do have options for pretty much everybody. I think if you have a customer who is interested in financing, you definitely urge them to go ahead and apply and get pre-approved. You can write the contract to do everything contingent upon financing, just in case something falls through the cracks. But for the most part, we can cater to almost any single type of client. We've also found too in our history that most people who are looking for a pool have pretty sound credit. About a third of our applicants last year had over a 790 credit score. So that's a third of everyone we spoke to who had excellent credit by industry standards. And then another large portion of that were in the middle range, 700 to 790. So most clients who are looking for a pool, they want that backyard dream. These are not people with terrible credit that you need to go, that are just kicking rocks. Most pool buyers already are sound financially, and they're just looking for financing because it's the best option for them at that time. Whether they don't have the cash or they do, it's what's going to be able to make them say yes at that moment. And this is an example of a monthly payment. What we talked about before is showing and using our loan payment calculator. Again, it's on our website. We encourage everyone to bookmark it or save it. You can give a best and worst case scenario. If you have the great credit, you can get on average a 4.99% for 20 years. You have average credit, could be about a 10% interest rate, just depending on your credit score. But again, we offer longer terms than most traditional banks or credit unions, so it still makes that loan affordable. Your best and worst case scenario, you could pay $500 a month, you could pay $730 a month. For most consumers, that's comparable to a car payment. That's your payment on your minivan, your Tahoe, your truck. So for many people, they can afford that. It makes it relatable. It just makes that pool dream more viable than they may have thought before. And with our application process and how we work, it really is super simple. I mean, compared to the other standard financing methods out there in the industry, talking about refinancing your home or borrowing from your 401k, our application process is really simple for your customer and then for you. They apply online. They're pre-approved in 1 to 2 days. They send some verification documents like a pay stub and W-2, nothing dramatic. They get final approval in 1 to 2 days, and then they receive loan documents and sign on the dotted line. Your average customer can be through the pipeline and done with all of this within a week, as long as they're prompt in getting us what we need. And getting a loan approved and signed with loan documents within a week is pretty unheard of right now in the industry. Again, with the prevalence of secured loans with refinances and other things, those are taking months to do. Our application process is really simple, and it lets that customer go ahead and get a decision much more quickly, and it lets them say yes a lot faster than other traditional methods. And when you're looking for a financing partner, you understand the value now of offering financing. You know how many consumers are looking for financing. You understand that monthly payment's important, and is a huge deciding factor for these consumers. So if you haven't worked with a finance partner before, or if you currently work with them and just don't really understand their process and how they work, I've come up with a list of questions that you can ask, and how it relates to your business. The minimum credit score required. So if you're looking to offer financing, already work with somebody, figure out what kind of customers they're catering to. You know, we at Lyon, we can go down to a 600 credit score. There's others out there, their minimum credit score required is a 700. Well, there's a whole bucket and a whole class of customers that you're missing out on because they don't offer financing options for certain credit scores. You can also ask, what is your average approval ratio? So question, as a pool company, if I'm sending you 10 customers a month, how many of those are you on average going to approve? Here at Lyon, we have a 94% approval ratio so far for the year. So 94% of the customers who apply do get an approval with us, because we have options that cater to almost everybody. What is the average rate or term my client can qualify for? You want to understand what you're getting yourself into by promoting a finance company. You want to have the full picture and figure out, well, here's this scenario. My customer's a 700 credit score and they want 50 grand. What kind of monthly payment, what kind of rate and term are they looking at? Get an idea of that, so that way you know in your head when you have a customer who's asking you financing questions, you don't want to give too much information away, but you can say, yeah, you could finance on average a pool for $400 or $500 a month. Here, call one of my partners, here's their information, and start the application process. You should also ask if there's any fees or costs involved. We've talked a little bit about fees already. If your customer is getting charged any fees, it's going to show up in loan documents under the APR, or it's going to show up as a line item. There's also some finance companies who do charge dealers fees based on the type of loan products that they offer. It most often occurs with spas and smaller home improvements. Many of the traditional finance companies who specialize in financing those charge the dealer some sort of percentage to offer their financing. We at Lyon we don't charge the customer any consulting fees to get their loan. We also do not charge any sort of dealer fees or costs to the contractor. So all of our loans, it's going to be free for the pool companies to use our financing, and there's minimal cost involved for the homeowner. Another question is, how do you generate income? I think that's a pretty brash but honest question. You need to ask your finance provider how they're making their income and generating business. For some finance companies, they make their money off of the fees they charge either your customer or what they charge you. We at Lyon, we generate income from the lenders that we work with. They give us a very small percentage of loans to pay us for our services. And again, answers those questions here for you guys, just so that way you have them for reference. We'll go down to a 600 credit score. We approve 94% of what we get. Most customers get a 4 or 5% interest rate for 20-year terms. And we have a minimal cost involved with our loans. It's a project management fee for our services of paying contractors directly. I think the last question, I skipped on that first slide, but I think that it's important. It's a very honest question to ask, is why should I trust my clients with you? Your pool company, you're going to be building this pool, you're going to be building this outdoor living or installing this spa for this customer. You know, who you associate yourself with and who you're referring to your clients. That says a lot about you as a company. And I think it's very important to understand who you're doing business with and who you're working with, because ultimately it's a reflection on you. And with Lyon, we've been in business since 1979, so we've been in business the longest in the industry. We've seen this industry come and go. We've survived the recession, 08, 09, and all of that. We pride ourselves on offering customers great rates and terms and offering transparency, so it makes the buying experience an enjoyable one. If your customer is shopping for financing and they're getting beat up by their bank, they are getting, you know, misled on rates or payments or terms, it's just going to frustrate them, and they may end up saying, I don't even want to do this project anymore. It's becoming more of a hassle. You want to offer your clients a financing partner who's going to make that process as easy as possible for your customers. It's going to make the process happy for them. They're going to go into pool construction happier because they did not get jerked around. They had a good experience, and it's just going to set the tone for a positive experience once you actually break ground and start digging. Some of the benefits of partnering specifically with Lyon, some of the things we offer all of our partners who sign up with us. You have access to exclusive loan programs specific to pools and home improvements. With our time in business and the volume that we do and the way we do business by paying contractors directly, the lenders that we work with truly love us and love the business that we provide. So we're constantly adjusting rates and terms to better meet the needs of the industry. In the last 5 years, our interest rates have considerably gone down year over year to keep up with the industry and demand. Oftentimes you won't see rate changes monthly. You won't see terms, you know, changing. We've had pretty standard programs for the last 7 years that we will continue to have just to be able to meet the needs of more pool buyers. Pools are a specialty, but we'll finance just about any home improvement right now. The majority of applications we receive are for new pool construction. But if you also do pool remodels, you do outdoor kitchens, landscaping, any other type of home improvement, we can finance that as well. Our minimum loan is $5,000 and our maximum right now is $200,000. So if you're getting into outdoor kitchens or outdoor living in addition to pools, or you're thinking about getting into pools, but right now you just do general home improvements, we do have financing options for you and for your clients. We also take customer service very seriously. We want to make sure that the experience that your customer has with us is a positive one. Again, it's because it's ultimately a reflection of you. If you refer your client to us, we want to make sure that we take great care of them, make sure that they get the best rate and term that they qualify for. They're not misled about the financing at all. They understand up front, you know, expectations, what they're going to see through the financing process, and then what to expect during construction that will be involved with them and you, and make sure that their project goes as smoothly as it possibly can. We also don't charge our customer any consulting fees. So we do not charge our customer any fees, and we don't charge you any fees either for our services. So marketing literature, you want flyers for your showroom, signs. You would like for us to come out and go to your customer service appreciation meeting. We're happy to do that and all free of charge. We'll just come up, show up, and try to take care of your clients the best we can. We're also a partner throughout the project, and this is the real thick line of what separates Lyon from everyone else in the industry. And that's how we do business. Is the financing's great. The customer gets great rates and terms. They qualify. The funds are secured. We at Lyon pay the pool company directly. We do that for a couple of different reasons. Ultimately, it's to make sure that you get paid on time and in full. If a customer gets the cash, especially in a market right now, they could change their mind. We've seen customers who have financed elsewhere and gotten the cash and end up buying a boat, buying a car, or they're halfway through construction and they've spent it all, and now they need to get another loan to cover it. I mean, we've seen so many scenarios over the years just because of our experience and how much business we do. At least with us, you're going to know that the loan the customer gets has to be used for that pool. If they want to cancel the project, they cancel the project, that they don't get any money. All the funds from their loan goes to you and pays you for the work that you've done. We also have some great flexible programs now where we pay per contract. So that way, if you're a top partner, we have options where we can pay you per your contract terms in most cases. We also have cash out options now. So if you have a customer who maybe wants a myriad of different projects, or there's a lot of funds up front for their project, we have cash out options now that give the money directly to the customer. That will not replace how we currently do business. We pride ourselves on paying the contractor and being involved to make sure you get paid. But if you have a customer who maybe wants a fence and a pool house and their flooring done in their home, or a lot of different projects that you don't typically do, you can still refer them to Lyon and say, hey, they have some personal loan options, check them out and see if they can help you. And last thing, protecting your reputation. We've already talked about it quite a bit, but you have to be very careful on who you partner yourself with, because ultimately it's a reflection on you. We're not perfect. You know, there are mistakes that could be made throughout the financing process, but for the most part, we're going to be transparent with your customer on the rate and term that they get. That's not going to change throughout the process. Whatever we tell them is what they're going to get, and we're going to be involved from beginning until end. And ultimately, that customer service is what sets us apart and what is going to really set the tone for your customer to have a positive experience all the way around.
Just to reiterate, when you were talking about payments directly to builders, how is that a better option for a builder than to go to the homeowner?
For a couple of different reasons. One, for most of our pool companies, most of our partners, they prefer it that way because they don't have to chase the homeowner down for a payment. You know, they're not swiping a credit card, incurring a merchant fee, or, you know, a cost for running a credit card. It's just they request payment from us and it's in their account in 1 to 2 days. They didn't have to go to the bank, deposit checks, they didn't have to do anything. The money's just in their account. So it makes it simple. And then it also guarantees the money. You know, if your customer gets the cash, most of them are pretty good. But we've heard some stories over the years of, you know, contractors saying, hey, my customer got a loan elsewhere and they've spent all the money and I'm only a gunite. You know, can you help them? Can you get them financing for the rest of their project? They had to buy a new car, or they paid off debt instead. You know, this is crazy. What can you do to help me? We've seen those scenarios over the years, and you're not going to run into that with us because the loan that the customer gets, it has to be used for that project, and it's going to be paid to you directly. And we included some of our top partners. I'm not going to read this out, but I wanted to, in part of this presentation, get feedback from some of the partners that we've worked with consistently over the last couple of years. Some we've worked with for just a couple of years, some we've worked with for many years, and kind of get some feedback from them on how they incorporate Lyon into their process. Just tidbits and things that you can review and look at and how you can incorporate it into your own. Coleman at Sunshine Fund, they offer financing to every single client. They go ahead and they take control of the sale. They send the customer the link to apply. They follow up on their approval, and they enjoy the customer service that Lyon offers. Jake with Precision Pools is pretty much the same. He incorporates financing into his process because it moves very quickly. He gets a qualified borrower a lot faster than just sending them to the street to find financing. He knows that we'll take good care of his clients, and it kind of just eliminates the back and forth that he would dealing with the customer direct. And then we also have a JC and Daniela with Element Pool Company. They were on the 40 under 40 or 30 under 30 list earlier this year. They have been a great success story of Lyon and have used Lyon profusely for their financing for their customers. In their area in Texas, financing is a huge factor for pool buyers. Again, like I said earlier, your market's different. You need to know a little bit more about your market, who's shopping for financing, who pays cash. But for certain markets, it's extremely financing heavy. And they've had great success with Lyon over the years in offering financing to take control of that sale and ultimately close that contract and start digging pools. So that is it for me. I hope that this information was helpful for you guys to kind of explain basic financing terminology, how it relates to the industry, how it relates to buying a pool, and then what to think of for yourselves as you start looking at financing companies. So you guys are more than welcome to contact me directly after the presentation. Happy to answer any questions that you guys have. If you'd like to get started with us and don't work with us currently, it's a very simple process too. Be more than happy to share that with you guys and get you taken care of.
That was great, Sarah. I learned an amazing amount about just that whole area of the pool and spa industry. We do have a few questions, and I think we've just got about a perfect amount of time left. So
Okay.
the first one I think is great. I didn't even think about this during your presentation, but it's a great question. Do you think current world events will affect the pool industry, pool finance industry, and if so, how?
That's a good question. I mean, everyone's kind of looking around at the gas pumps, grocery store. I mean, inflation, higher cost of living. I mean, it's running prevalent right now. I mean, in the pool industry, we see it heavily with increased, pricing on materials, raw materials, shortage of things. I think that, along with the Federal Reserve raising interest rates and just general unrest in the nation and the world right now, I think it will not impact the pool industry directly in terms of demand. I think the backyard renaissance, so to speak, is here to stay. I think more consumers are going to want to invest in the home. They may start traveling more. There's been restrictions lifted for many areas. But I think this backyard living trend is here to stay. I think with us, interest rates may increase a bit towards the middle end of the year, just because of what the Federal Reserve is doing. It does impact banks. The good thing with us is most of the lenders we work with are credit unions or industrial banks who are not as heavily impacted by the Federal Reserve. So for us, we're going to guarantee our rates and terms for probably much longer than a typical brick and mortar bank would. So your customers still have advantage and can take advantage of great rates and terms while we still have them, so they can make that backyard dream come true.
Okay. Here's another one. What are some current trends that you're seeing from borrowers?
I think the biggest trend is just that turnkey backyard. They want everything in their backyard. They want the pool, they want the outdoor kitchen, the pergola. They want all these features that they may see in a pool in a magazine. Their neighbor got one, they need to have one. So seeing just that full backyard package. So again, I'm seeing a lot of pool companies who are starting to add that to their pool packages. They'll sell the pool spa combo and then a $12,000 outdoor kitchen and patio. They're starting to add these like pre-packaged things and features into their basic pool contracts. I think that's a great selling tool. And again, you can use that monthly payment calculator to show how affordable that package could be for a monthly payment for a customer.
Okay. I think we've got time for maybe two more. I've got one here from Connor Golke, and Connor says, how does it work with having to do a credit pull on a customer if a company doesn't meet the completion date? For example, due to longer permit time or longer construction time?
With us, I know exactly what Connor's referring to. When a customer applies with us, we do a soft pull on their credit to make sure we can help them. We want to make sure they have at least a 600 credit score. When we do the soft pull and know we have some options for them, we'll submit them to one of our lenders who will do a hard inquiry and who will actually provide the note. So they'll provide the rate and term and the loan amount the customer is looking for. If the customer, and I'm seeing it everywhere, customer applies right now, but they're not planning on breaking ground for another 6 to 7 months. They have to get approved for financing and go ahead and get on the schedule, so that way the pool company get approved so the company can put them on the schedule. We have a couple different workarounds for that. Most of our loans are good for 6 months. So if the project will not start by the 6 months, we either one, extend the customer's loan, which is usually just a courtesy extension. We've negotiated with many of our lenders not to repull credit right now, just give courtesy time to get the project started. So that is an option now to avoid a credit pull. We do have a couple of lenders who will look at the customer's credit again at the end of that 6 months if they need additional time. But what we're trying to do is if you're going to start within a couple of months, we have some options where the customer can go ahead and fund their loan and start making their monthly payments and avoid any additional credit inquiries. And if there's a particular customer you're referring to who wants to explore that option, just have them call us. We'd be more than happy to walk them through that.
I think we've got time for one more, and I must apologize to there were a lot more. We just can't get to all of them. But this comes from Bob Williams, who asks, what is the difference between a consulting fee and a project management fee?
So a consulting fee, what we're seeing in the industry is finance companies who's charging a consulting fee to the customer and giving them the money directly. It's considered a consulting fee or administrative fee that is charged to the customer just for giving them the money directly. What we're hearing a lot of, because consumers call us many times a day, they're being charged about 6%. So a customer gets a loan, they get approved with this company for $100,000. They are also being charged a $6,000 fee for the services of using that company. There's no other services or things provided. It's just the customer gets the money, but gets charged a 6% fee. The fee is worked into the APR. So that's why I talked a lot about APR earlier. When your customer's looking at loan documents or you're looking at loan documents, you need to look at APR in addition to interest rate to see what fees are incurred. We charge a project management fee for our services of paying the pool company directly. It's a $750 fee that can be paid out of pocket or worked into the loan. If the customer finances it, that's great. It's not APR affecting, meaning they don't pay additional interest on it. And that's for our services of being involved in paying the pool company directly. We actually do several things where we don't charge that fee to certain customers. The $750 fee is not charged in the state of California or New Jersey. And we also waive the $750 fee for all military members, whether active or retired. We have some great military loan benefits for active or former military members. We have some special interest rates and terms they can qualify for based on their status. We also waive the fee for them, so that way it's truly a no-fee loan for them, just to ultimately put more money in their pockets. So that would be the difference, is you have to look at the fees being charged and the services that are being provided. A 6% fee for giving to the customer the money directly is just absolutely atrocious. But working with us and having the customer get paid directly, or having us pay you directly, customer has a partner like us involved. There is a small fee that we charge for that, but that's because we're involved from beginning to end.
Gotcha. Well, Sarah, I want to thank you for teaching me some stuff about this subject that I learned a lot. That's all we have time for today. Sarah's email address is there on the screen for any further questions about this. But otherwise, these are busy days for builders and finance people and editors alike. So I guess we'll all get back to work. Thanks very much.
Good. Yeah, thanks for having me. Hope everyone has a great day.